Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor, and this is not financial advice. So, in today's video, we're going to look at the economic data that came out. We'll go over some news. We will take a look at the overall market. Then we will wrap it up for the week, looking at the economic data we have coming up next week. So, starting here with the economic data, we did have the U.S. non-farm payrolls coming out better than expected. We also had the U.S. unemployment rate coming out worse than expected. I mean, in hindsight, if you are the Federal Reserve, this is better than expected because the Fed is currently trying to destroy the economy. So now we'll turn to some news. So most of y'all might be aware that we are currently having pretty much a banking crisis happen. It started here with the Silicon Valley Bank, and here's just a little timeline of what happened. So there was rumors that came out that they were facing interest rate risk on 91 billion in bonds. They then came out and announced a fire sale of 21 billion-dollar bond portfolio, and they ended up taking a 1.8 billion-dollar loss. They announced a 2.3 billion share sale to try to cover all the losses from the bonds. Then a bank run happened with a bunch of the account holders cashing out, large sums of money over the FDI insured threshold. And then the credit agencies cut their credit ratings. And then the pressure spread to other U.S. banks, erasing 80 billion in market cap in one day. And the stock also fell 60% yesterday, and then 22% after hours. And I'm pretty sure they halted and everything today. And if they do fail, it'd be the second largest bank failure in the U.S. history and the largest failure since the Great Financial Crisis. And here's a chart looking at a lot of the regional bank stocks. As you can see, just insane sell-off today in the banking sector. And this is a chart on rising interest rates. Here you can see the 2-year Treasury yield rising, and this is the regional bank ETF, as you can see, just cratering. This is a funny little meme from the Matrix, but we have a comment here saying that U.S. banks have 17.6 trillion in deposits, of which 3.1 trillion is backed by cash, of which less than 100 billion is actually backed up with physical cash. So if there is when the debt market implosion does actually happen, there will be no way to get your money out of the banks because banks will, the dollar's going to zero. So this money will be worthless. And if you couldn't even get it out of the bank because banks don't have any money for you to get out. We also have New York saying Ethereum is a security in a KuCoin lawsuit. So this is pretty massive, especially for those XRP holders that have been, feeling all the bullshit that the Ethereum Foundation and Ethereum holders have been saying about XRP. Here we have mortgage payments needed to buy the median priced home for sale in the U.S. has moved up to $2,563, a new all-time high. A year ago, it was under $2,000, and 3 years ago, it was under $1,500. And we also have the government trying to block Binance from acquiring Voyager Digital. So yeah, that'll do it for the news. Now we'll turn to the charts. Starting here in the debt market, as you can see, massive death candle here in the 10-year yields, breaking through yesterday's lows, getting through that midline, coming down to the lower extreme. Also pulling into the middle of the range here on the weekly chart. The dollar, red day on the dollar too, getting continuation to the downside. Wicking below that midline, but still currently closing here above it. As you can see, massive wick here on the weekly, so I would probably expect some more downside here coming up in the next week, closing below that. Hasn't closed yet, but if it does, it will close below that midline. Turning to the S&P 500, as you can see, another big red day continuation, breaking through yesterday's lows, making its way down here, really extending through the lower extreme. I do want to note here on the weekly, this downtrend line that I swear to God, everybody on social media has been talking about. This pullback here on the weekly is violating this trend line. So I just wanted to show that because I know this trend line has been making a lot of noise. As you can see, the weekly coming down here to this previous support and this lower extreme. This lower extreme is currently lining up with this support here. Now we'll look at Bitcoin. Oh, and this chart's kind of messed up. Oh, it's not on log scale, my bad. So Bitcoin continuing its weakness as well, breaking through yesterday's lows. You know, still just making its way down, trying to find support here, breaking through that midline. Oh, we will look at XRP here. XRP, big wick, still currently slightly red and still green on the week. As you can see, the relative strength here in XRP is extremely high with the XRP BTC chart climbing here. And as you can see, XRP dominance really taking off. So, you know, I am expecting a large move here in XRP coming up very soon. As you can see, starting to get pretty squeezed here. I might make just an XRP video, but overall extremely bullish, looking for a large move to the upside here, hopefully with the conclusion of the lawsuit. Commodities, returning to oil here. Getting a green day after 3 consecutive red days. You know, kind of sitting down here in this lower range. Gold, monster day in gold too with this banking crisis. You know, if banks start to go down, gold will benefit from that. As you can see, getting through the midline, breaking through this previous resistance here and pushing up into the upper extremes here, getting a nice bounce up the middle of this monthly range. And very, you know, tight here on the daily range. Silver, strong day here in silver as well. Nice to see some strength out of silver here. But still, you know, pretty bearish, but it is nice to see some strength. So now we'll turn to the charts for the trades today. As you can see, this is the S&P 500. We'll zoom out a little more. So we'll start with our analysis here. Starting here on the 15-minute, as you can see, we did open lower than yesterday's close. We got some strength in the morning coming up, getting rejected off that 200 and 100-day moving average before selling off throughout most of the day, and you know, getting a slight bounce in here towards 2 o'clock, but then really just closing with a lot of weakness here. So there's a lot to unpack with this, but I did want to say something here. Let me go to the 5-minute about the YouTube channel and the trading. So when I first started this YouTube channel, you know, obviously it hasn't been long, maybe like last week. My goal when it came to showing, like, kind of teaching how to day trade was to mainly focus on my squeeze and trade line strategy, because in my opinion, you know, that's one of the greatest trading strategies of all time. Nobody taught me that strategy. I did just figure it out through putting in my hours throughout the years here on these charts and this platform. But I do want to note that it's not the only trading strategy, right? And I know not every day there's going to be a squeeze. There's not going to be some epic trade with a perfect, just chill squeeze, just buying like little red dots, right? There is other opportunities in the market. And, you know, after this week, I think I do want to explore more into other trading strategies besides the squeeze. We are still going to heavily focus on the squeeze, but I do want to, you know, when other opportunities arise, I do want to point them out. I don't want to spend a lot of time on them, but I do want to show you so you can, you know, open your mind to other type of opportunities in the market, right? Because I feel like I'm almost doing y'all dirty by showing y'all only one strategy when there is other strategies at the same time playing out that you could also benefit from. So, yeah, we're going to start here on the S&P 500 because there was a good trade today, but as you can see, there wasn't really any squeeze. I mean, there was a squeeze here, but, you know, this is a really weak type of trade. It's very bearish. You're not going to want to get long in bearish situation. But as you can see, it did make a nice move here to the downside, but there was no squeeze to the downside. We did get a momentum shift here, but there was no squeeze, right? And I want y'all to be able to take advantage of this kind of volatility, even though there isn't a squeeze. And I want to show you kind of what happened here. So the first real opportunity was, there has been a trend this week, right? We'll zoom out to so you could see the rest of the week here. So you see Monday we got strength in the morning and then sold off in the close, right? Thursday we got strength in the morning, sold off into the close. So there has been if there is strength in the morning, it gets sold into, right? Because the other 2 days were just pure selling and then just chop. So the trend this week has been any strength you get in the morning to just sell into. And here we broke through these massive, extremely important moving averages, right? Yesterday. And we opened below them. And then we got strength into the morning, getting rejected off these critical levels. Because these levels will act as support or resistance depending on which ways you come into them. So there was a really good opportunity to short into this strength here in the morning. Shorting here into this 200-day moving average. As you can see here in the 1 hour with this 1 hour trade line coming down here as resistance as well. And here on the 2 hour as resistance as well. So this was just kind of, a sell the strength kind of trend that we had been having, the whole week basically. So that was a good trade opportunity that you could have taken selling into this major moving average here, getting to take advantage of the bad news, the banking crisis that was happening today, and just the overall downtrend that we are in. And there's actually another opportunity type of like trade I want to show you guys that happened in the SPY today. And another reason why I've been good short here too was also pre-market resistance here, right? You can see this massive rejection here in the pre-market. But I do want to turn the pre-market data off because I feel like it does make the trade I'm about to show you easier to identify. So here's the rejection, right? And we have a very obvious reversal pattern here. This is one of the most common patterns in the entire stock market. This is a head and shoulders pattern, right? You have your left shoulder, you have your head, you have your right shoulder, and then you have your neckline. So this is a bearish reversal pattern. So when you break that neckline, we did get a retest of it with this trade line coming down here. This could have been another opportunity to get short and take advantage of the bearish momentum and the bad news that we were having today, right? This is a very common head and shoulders pattern, which is a bearish pattern, right? You have reverse head and shoulders patterns, which are bullish, but this is just a typical head and shoulders pattern that is bearish. And there's also something else I want to show you about this head and shoulders pattern. So when we zoom out here to the weekly chart, right? I was talking about this downtrend line earlier. And as you can see here, I have the drawing set on major SPY levels. So we're going to go to the 5-minute and we're going to look at this trend line, right? So we're here back on the 5-minute. I'm going to switch to see that trend line and look where that trend line goes, right? This trend line also kind of marks the neckline of this head and shoulders pattern, right? And once you broke through it and you came up to retest it, that would have been a really nice spot to take advantage of this downward momentum in order to short the futures or get some put options to take advantage of that move. So yeah, obviously there wasn't any good squeezes here, but I did want to kind of talk about other trading strategies. I wanted to show you guys some pattern identification and just some key takeaways when it came to how the S&P 500 did behave today and how you could have taken advantage of this kind of trading action. So yeah, there's that. And then obviously we can look for squeezes. I mean, to be honest, there really wasn't any that like squeezes today because of, it was one of those reversal kind of days where we had strength in the morning and weakness throughout the day. As we talked about a couple times this week, that's not the most ideal for squeezes, which is why I'm kind of showing you how to take advantage of other type of, trades and patterns and whatnot. But there actually was a really good squeeze today that I want to show you guys that was, really nice. So if you look up here on the gap vol, we had Intel here at the top. It was pretty much at the top all day. I was watching this yesterday because if we look here yesterday, it did have a nice move and almost got a squeeze continuation before that budget came out and destroyed the price action. But there was actually a really nice squeeze today here. As you can see, we got the, hold on, let me turn the pre-market back on. As you can see, we got the nice rip up, the pullback, the consolidation, the momentum shift to the upside, the squeeze, the MACD cross, and you get your volatility event here to the upside, coming in and retesting this previous resistance right here. So we can zoom out here on Intel so you can get a better idea of what is happening. So yeah, we'll look here at the 30-minute. As you can see, we got the push up, the pullback right into yesterday's highs. We had VWAP here, and we got the 30-minute trade line VWAP cross. Really nice setup here on Intel. The strongest stock by far on the list, so I was pretty much just staring at this all day. It did happen later in the day. This move did happen around 2:30, so you did have to be pretty patient on this one today. And I want to just kind of go over this line I have drawn. That was an obvious resistance line. As you can see here, we have this previous low and this low as well lining up right here. So that is where I drew that line from. You can look up here on the 2-hour. It's kind of this this gap fill here and this swing low. So you can kind of see what the overall move was here. We did have this downtrend break. We broke through it, came up to retest, pushed up, got rejected by the upper band, pulled into the moving averages as they got their bullish cross, and then we did get our extension to the upside. I was hoping this would kind of make like a stronger move up towards this 50 and 100-day moving average. We haven't got that yet, but I'm definitely going to be watching for that continuation because I think it still does have some, room here to the upside. And on the weekly chart, you can see here, this was a double bottom bounce, getting through that midline. So yeah, that was pretty much the only good squeeze today. I did show you guys those patterns and opportunities on the overall S&P 500 ETF that you could have taken advantage of as well. But we'll take a look at these options here on Intel, dive more into this squeeze. This was actually actually a really nice trade. I love this one today. So as you can see, coming down here, we had the 27 strike call options. Squeeze here with the momentum shift as we're breaking this downside here. These contracts, I got in a little early on these. I got in about like a 10, 11 cents. So we'll call your entry 11 cents. And this move up to the upside here was, we'll call it 250%. 250% move on this Intel squeeze. That is boss. So, yeah, really nice trade today. No one's complaining about a 250% gain on a Friday afternoon. If y'all know anybody, please show me another trader that is showing y'all how to make 250% on a Friday. I'm just kind of kidding with that, but honestly, kind of not at the same time. But yeah, that'll do it for the trades today. There was some good opportunities in the S&P 500, and we did have this Intel squeeze. Yeah, so now we'll turn to the economic calendar, see what we have coming up next week. So next week, we do have CPI coming out on Tuesday. So yeah, that'll be really something to look forward to because, CPI has been the talk of the town for a while now. So yeah, next week should be fun. Should be a lot of action next week. Well, that will do it for the video. Appreciate y'all watching, and I will talk to y'all later.